All right, let's talk about the food delivery wars, because it is an absolute battlefield out there, and one of the biggest players just made a huge chess move. We're going to break down Uber's super strategic deal with Delivery Hero and what it really means for everyone.
Okay, let's get right into it. The headline that got everyone talking is about Uber making this major power play, and you can see why. This isn't just some simple stock buy. It's a really calculated move in a very, very high-stakes game.
So, that brings us to the main question we're unpacking here. What exactly is going on between these two giants? What's the real story behind this Uber and Delivery Hero deal? Let's get into the specifics.
At its core, the deal is actually pretty straightforward. Uber's buying a piece of Delivery Hero. Now, they're not taking over the whole company or anything, but they are buying a pretty significant slice of the pie from another major investor.
So just how big of a slice are we talking about? To really wrap your head around the scale and the strategy here, we have to look at the numbers. So let's break down the financials.
The total investment from Uber comes in at a massive 270 million euros. We're talking well over 300 million US dollars. This is some serious cash, and it really signals just how important this is for Uber's global strategy.
And what does that 270 million euros actually buy them? Well, it gets them a 4.5% stake in Delivery Hero. Now, that might not sound like a controlling share, but trust me, in the world of these publicly traded tech giants, that is a very significant foothold.
Okay, now this is what makes this so interesting. The premium. Uber paid a 22% premium over the stock's recent average price. So think about that. They willingly paid more than the market value. That tells you this wasn't just some casual investment. This was a strategic opportunity they were determined not to miss.
But that kind of begs the question, right? Why did this opportunity even pop up? Why was this super valuable stake suddenly on the market? Well, the answer is this fascinating chain reaction that I like to call the regulatory domino effect.
Let's walk through this, because it's kind of wild. It all started when another big tech investor, a company called Prosus, made a massive $4.3 billion deal for Just Eat Takeaway.com. European regulators saw that and basically threw up a red flag. They were worried Prosus would have way too much influence. So the ruling? Prosus had to sell off some of its stake in Delivery Hero. And just like that, a 4.5% stake goes up for sale, and guess who is ready and waiting to swoop in? Uber.
So, with Uber snapping up those shares, what was the final outcome for Prosus, the company that was actually forced to sell in the first place?
This chart shows the shift perfectly. So before the sale, Prosus held 26.3% of Delivery Hero. After selling that chunk to Uber, their stake drops down to 21.8%. It's still a huge holding, for sure, but their influence has been noticeably watered down, which is exactly what the regulators wanted.
Okay, so we've covered the what, the how much, and the why, but let's zoom out all the way. Why does this one single deal actually matter in the grand scheme of things, in the huge global food delivery wars?
So let's just boil this down. First, Uber gets a really valuable foothold in a major competitor. It's kind of like hedging their bets in this global war. It's like saying, hey, if we can't beat them everywhere, we can join them, just a little bit. Second, this is a perfect example of how a regulator's decision in one deal can accidentally create a multi-million-dollar opportunity for someone else. And finally, with Prosus having less say, Delivery Hero gets a bit more breathing room, and that could potentially change its own long-term strategy.
You know, this move is just another fascinating chapter in an incredibly cutthroat industry. It shows that the road to winning isn't just about getting customers, it's also about smart, strategic, and yeah, sometimes really opportunistic investments. And it leaves all of us watching with one big question. In this global race, who is ultimately going to come out on top?